Hi everyone. Today I want to discuss a topic that has caught the attention of investors all over the world, and that is SpaceX. Everyone is attempting to figure out how much SpaceX is worth. Others think it might be worth several trillion dollars in the future. However, some put the value of the firm at a few $100 billion, and it's simple to see why. SpaceX has transformed the space industry, built reusable rockets, constructed one of the world's largest satellite networks, and is gradually playing a key role in the future of artificial intelligence infrastructure. But with many investors looking to chase SpaceX, there are other publicly traded corporations that may actually have superior fundamentals, more transparent financials, and perhaps higher growth potential. To understand the situation, you first need to look at the value drivers of SpaceX and then compare those drivers to opportunities that exist elsewhere in the market. It is important to understand that SpaceX is not just one firm. Rather, think of them as three individual companies operating under one corporate tent. These are launch services, Starlink, and AI infrastructure. The economics, the growth rates, and the valuation levers are different in each of these categories. Let's talk about launching a business first. This is the SpaceX business as it was originally, the one that built the company's reputation. SpaceX's Falcon rockets and other launch vehicles have made the company the top provider of commercial launch services in the United States. It has a commanding market share and launches more than almost any other commercial competition. This is the competitive advantage that makes this business attractive. You can't just go and shoot rockets into space. The tech is hard, the technical needs are huge, and the barriers to entry are among the highest in any business. Such expertise is not something a rookie player can easily copy. Meanwhile, investors have to realize launch services alone are not likely to be the key driver of spectacular expansion in the future. The space sector is set to boom over the next few decades, but much of that growth will come from activities that take place in space rather than from launching rockets per se. Even if launch activity doubles or triples over time, the launch business likely supports a price in the low hundreds of billions, not several trillion dollars. It's a good business. It is not always a growth engine of transformation per se. The second step is Starlink, and this is where the SpaceX story gets way more exciting. Starlink also provides satellite internet access to much of the world. Traditional telcos need a lot of physical infrastructure like fiber networks and cell towers, while Starlink can offer connectivity directly through its satellite constellation. This business is already on the wonderful sales growth trend and looks like it is making tremendous profits. Most significantly, it serves markets that traditional broadband providers have not yet reached. Potential markets include remote businesses, rural people, maritime and aviation consumers, and many rising nations. Some say Starlink is considering the entire global telecoms business. This assumption is probably unrealistic. In dense urban areas, legacy broadband providers can compete on both price and quality. The price of Starlink could also be too high for many lower-income communities. But Starlink doesn't have to dominate the entire telecoms market to be very profitable. If the profitability continues, a portion of the global connectivity industry might support a multi-hundred-billion-dollar company. And the last piece is AI infrastructure. This segment is the most speculative and the latest episode in the SpaceX story. The extraordinary growth of artificial intelligence has created an unparalleled requirement for computing power. Training advanced AI systems and running them requires vast amounts of processing power, electricity, networking equipment, and supporting infrastructure. The possibility might be huge if SpaceX becomes a large provider of AI infrastructure, but investors should realize that this is still a developing business. It requires a lot of capital, there is strong competition, and there is no guarantee of profits in the future. The benefit is enormous, but the hazard of execution is as great. Throw in the potential value of launch services, Starlink, and AI infrastructure, and investors can see why some experts estimate SpaceX might eventually be worth more than $1 trillion. We shall see if such predictions are right, but they do help explain why there is so much enthusiasm among investors. Let's look at three publicly traded companies that could benefit from many of the same long-term trends, but with better visibility on the financial side and potentially attractive investment opportunities. The first is ASML. ASML is one of the most important firms in the global technology ecosystem, yet it's not nearly as well known as NVIDIA or Apple. When investors talk about artificial intelligence, they usually talk about the companies that make the processors, but you can't produce those chips without ASML's special machines. ASML manufactures the cutting-edge lithography machines that chip makers employ to create the world's most powerful CPUs. Some of the most advanced industrial machines ever constructed. They are built with the latest optics, lasers, precision engineering, and highly specialized manufacturing processes developed over decades. ASML's competitive moat is particularly noteworthy because it's resilient. Only a few companies can compete at this level, And in some areas, ASML is pretty much on its own. The skills needed to build these systems are so specific that even well-funded competitors are having tremendous difficulty trying to replicate the technology. Artificial intelligence is boosting the need for more powerful semiconductors, which will necessitate more advanced equipment from manufacturers like Taiwan Semiconductor Manufacturing Company, Samsung, and Intel. That gives ASML a strong long-term demand driver, and ASML is going increasingly toward higher value goods with better margins. This is a sign that higher sales volumes and a better product mix are driving the rise. ASML is well positioned to benefit strongly as production capacity increases and customers continue to invest in sophisticated manufacturing capability. Many investors look at ASML's valuation and feel it looks expensive, but valuation has to be relative to growth all the time. A company that grows earnings at 20% or more per year can command a much higher valuation than a mature company with little or no growth. The concern is not whether the stock is pricey at its current multiple, but whether future earnings growth justifies that multiple. The other company I will talk about is Northrop Grumman. Most people see Northrop Grumman primarily as a defense contractor, and that is indeed an important part of the business. What many investors may not know is the company's considerable exposure to space-related activities. Northrop Grumman designs, develops, and manufactures satellites, launch systems, missile systems, radar systems, and other aerospace products and solutions. As the space industry continues to expand, companies like Northrop are ready to take on an even bigger role. Space exploration, satellite launches, communication networks, national security missions, and commercializing space all require a sophisticated infrastructure. Northrop has decades of experience in many of these fields, giving it a huge competitive advantage. Northrop also benefits from broader trends in defense spending. Beyond the space prospects, governments around the world are still spending vast sums on military modernization, missile defense, cybersecurity, intelligence systems, and advanced aerospace technologies. These priorities align with the strengths of companies like Northrop. Some investors worry about political uncertainty and changes in government expenditure priorities. They are reasonable concerns. That said, many of Northrop's key business lines are well aligned with long-term strategic ambitions that should remain important regardless of what short-term political developments may take place. The organization also benefits from exposure to places where demand may increase due to equipment replenishment, modernization plans, and changing security needs. But Northrop might deliver stronger growth than many investors expect now. GE Vernova is next on our list. This is perhaps the least acknowledged of the three possibilities, but it overcomes one of the main hurdles to the AI revolution: electricity. When people talk about artificial intelligence, they talk about chips, algorithms, software, and data centers. But all those devices need huge amounts of electrical power. If you don't have adequate power generation capability, then none of the other elements can work at the scale that is needed. In many circumstances, data centers may be created quite quickly, but building out the power generation infrastructure takes much longer. Utilities and energy businesses need turbines, transmission lines, and other key equipment to put new producing capacity online. GE Vernova is a major supplier of the technology. The company develops huge gas turbines that generate lots of electricity. We need these turbines to keep up with the growing demand for energy. The expansion of artificial intelligence applications is projected to dramatically increase power demand. Data centers alone are likely to require huge amounts of more power in coming years. This is a key demand driver for companies involved in energy infrastructure. One of the most attractive features about GE Vernova is its position near a bottleneck. Often, the best investment possibilities can be found in companies that control some critical bottleneck in a wider ecosystem. Enterprises near bottlenecks tend to have pricing power, better margins, and more insight on future revenues when demand exceeds supply. Demand for large-scale power production equipment is said to be very strong, with enormous backlogs rolling forward for years. This means customers are actively investing in infrastructure to support future growth. Naturally, stocks of firms linked to high-growth themes can be quite volatile. Investors get jittery about interest rates, a weakening economy, geopolitical events, or a change in market sentiment. Such concerns can cause spiky near-term movements, even if the long-term investing thesis remains intact. History tells us the best investments have been volatile on the way up. High-growth companies don't go up in a straight line. Along the road, there are sometimes periods of uncertainty and market turbulence. With prospects like SpaceX, ASML, Northrop Grumman, and GE Vernova, investors need to focus on the business fundamentals and not the short-term market swings. In the short term, stock prices might be volatile, but over the long run, revenue growth, profitability, competitive advantages, cash flow generation, and demand drivers matter much more. Another big lesson is valuation. A large number of investors focus on the share price of a corporation rather than on its earning capability. A stock that trades at $2,000 a share isn't always expensive, and a stock that trades at $20 a share isn't always cheap. What's important is its price in relation to the company's ability to generate earnings and cash flow in the future. A fast-growing company can often command a higher valuation multiple because investors are purchasing future growth, not just current earnings. Conversely, a slower growth company can warrant a lower multiple even if the shares appear inexpensive on an absolute basis. The trick is to comprehend what investors are actually buying. Are they buying a durable competitive advantage? And is it what they're paying for in terms of strong future growth? Is it a business with genuine price power they are buying? Those questions are considerably more important than just the stock price. In conclusion, SpaceX is one of the most amazing companies of our time. Its leadership in launch services, satellite communications, and the emerging AI infrastructure has investors buzzing. There's a reason so many think the company might be one of the world's most valuable companies. But don't forget the companies that make many of these opportunities happen. Essential equipment to make advanced semiconductors is provided by ASML. Northrop Grumman is a key aerospace and defense infrastructure provider that will benefit from the emergence of the space economy. GE Vernova is working on one of the main hurdles for artificial intelligence, the requirement for much more power generation. All of them are companies that are riding strong long-term trends. Both offer substantial competitive benefits, and each could give investors a more unfettered way to profit from technological and industrial progress than trying to estimate the future value of a private company like SpaceX. At the end of the day, the most interesting story is not always a winning investment. It's about identifying companies with solid fundamentals, sustainable competitive advantages, attractive growth, and valuations with a margin of safety. These ideas are as important today as they have been throughout the history of investing. Thanks for watching. Please subscribe to the channel. It really helps us out.